So, have you ever done something and you look back and go, man, I really regret doing that? I've got a lot of those moments. Like wish I wouldn't have dated that girl, made that deal, or drank that last drink. Well, I'm going to share with you my biggest regret with stocks in the hopes that you do not make the same mistake. The reason why? Well, for me, it's a 7-figure screw up. And yes, it hurts really bad. So it would be awesome if you liked the video up front because no kidding, this makes me want to vomit every time I relive it. And I guess subscribe too, even though I just talked about puking. I'm sorry, we keep it real on this channel, even if it's a little gross. So this mistake is easy to make, and on the surface, it was not a failure or a mistake. I followed conventional wisdom, and at the time, everything is great. But now, nothing could be further from the truth. And if I had access to the 3 courses in the Market Insiders private group, and all those awesome exclusive videos, and all the awesome people in this super sweet Discord to help me avoid this 7-figure disaster, I would not have this massive regret at all. And before blasting me for promoting this, I'm sorry in advance, but check out this video right up here and it'll tell you exactly why I promote it, how much money YouTube actually pays me, and what I do with that money. Once you check that out, if you want to come back and blast me, then I'm all for it, I understand. And don't forget the discounted spots are almost full, so when they run out, the price does go up. So to set the stage correctly, we have to go way back in time to 2001. And back to a time just after the dot-com where everyone was shocked that pets.com didn't work out, and the NASDAQ was down and would take 14 years to recover back to where it was just the prior year in 2000. 14 years, guys. I picked up this scrappy little company called Apple. Now, I didn't actually buy Apple for 30 cents per share. It's split multiple times since then. But to keep the example simple and make it easy to find a chart if you want to reference back to it later, we're going to say 30 cents per share. And I bought $4,000 worth of shares. Okay, so where was my mistake? That seems like an awesome price. Well, the truth is I had the wrong mindset back then. And although I had a plan, it was not a good plan that was thought all the way through. But back on topic, I screwed up big time, and here is what happened, and then I will give you the breakdown of the lesson and exactly how to avoid this. So when I bought Apple, I felt they were different and onto big things, so when the iPod dropped, the stock shot up. Even though I thought the iPod was kind of dumb. I mean, who doesn't want a tape or a CD with album art and pictures and lyrics? Who would want to download and miss out on those things? But I still loved the company and felt there was more to come, and I was actually right. But my position went up 30%, so I took some profits.
You can never lose money by taking profits.
Well, I can tell you, that's actually not true over the long run. I was and still am a long-term investor, and taking profits cost me big time. Now don't get me wrong, it's nice to see your account go up from $4,000 to $5,200. And that is great if you're a day trader or swing trader. It makes perfect sense to sell. But I'm a long-term investor, and if I had not sold half my original shares, I would have an extra $960,000 in my account today, or almost $1 million. It's disgusting and makes me sick every time I think about it. And no, there is absolutely no way I took my profits and turned it into a return anywhere close to that. So here's the lesson, as I want nobody to ever have this feeling. Now, I'm not talking about speculative plays or swing trades or stocks that I feel will be great and I want to own long term, but the opportunity doesn't have, this massive TAM associated with it or anything else like that. I'm talking about your highest conviction plays you have. And my guess is you have some stocks that you think will be huge 10 years from now. Do not sell and take short-term profits, but instead hold over the long term and add when opportunities present themselves instead. Now, I did keep half my shares, and I have added shares throughout the years as well to my Apple position. But if I had just done the easy thing and just held on to those additional shares instead of thinking short term and not having a great plan, I would not have this sick feeling right now. Who knows, maybe the lesson learned and pain associated with it has kept me from selling out of other positions and taking profits, and the money made there just by holding has made up for all this. But it's still something that haunts me today, and why I harp so hard on having a plan for a stock before you ever buy it. A plan for if it goes up, if it goes down, where to add, and everywhere in between. There's no doubt in my mind if I planned back then the way that I plan out my stocks now, I would not have sold, and I might even buy a new sweater. Well, maybe not. I'm pretty cheap still. And if you don't have a defined plan for all your stocks, or you don't know how to create a plan or value a stock, We can help you with your planning, as there is a course in the Market Insiders private group dedicated to that, along with creating an infinite money loop and other courses available as well, along with live weekly Q&As where you can ask me anything, a great Discord group, tons of exclusive videos, downloads, and more, all for the price of a meal for two at McDonald's. Consider it a cheap date that went really well. So check that out, it's the first link in the description. So thanks for watching, and we'll see you in the next one.